agenda. We're going to talk about the mission statement for HealthiosXchange. What is crowdfunding and why now? Why healthcare? Why, of all industries for crowdfunding? What is HealthiosXchange and how does it work? And why should I curate my company page for those emerging growth companies seeking to raise capital via this medium? HealthiosXchange's mission is pretty straightforward here: to unify the promise of medicine with the fortune of those who invest in it. The mission of HealthiosXchange, and by the way, Healthios is the sponsor of HealthiosXchange. Healthios is a Chicago-based investment bank that specializes in venture capital, raising venture capital for private companies in the healthcare space, including medical device, pharmaceuticals, HIT diagnostics, etc., and also services. The goals that we have with the portal, there's 7 here. Expand access to capital by attracting new investors to healthcare. If you take a look at some of the challenges associated with raising money from venture capitalists, it's been very, very tough. So, like over the past decade, the number of venture capital firms has declined by 62%. And the aggregate annual investments by VCs has fallen 14.8% annually. Since 2010, 77% of the capital commitments to VC funds has been raised by 30% of the VCs. And 52.7% of financing events in the emerging growth healthcare market between 2006 and 2011 were supported by investor syndicates comprised of 0 new investors. So having said that, obviously it's been very challenging, and companies want to raise money, and crowdfunding obviously is of interest to a lot of companies and also investors. The second point, enhance liquidity by deploying exclusive HX scoring tools, which we'll go into more detail. Heightened IRR by offering all deals on a no-fee, no-carry basis. So there's no retainer. It's free to join the portal, and we get a 5% success fee on money that's funded through the portal. Ability to directly invest in more than 5,000 companies. There's no 2 and 20. Seed to exit platform, meaning no orphan companies. You'll see this is a capital-intensive industry. So, on average, the top companies raise almost $50 million over a nearly 6-year period of time. Investor protections, obviously it's very important. We tackle that by no adverse deal selection, meaning we do not limit the companies that go on the portal. Stringent quantifiable due diligence methodology. So, of course, our scoring. We have a robust research platform where you can research companies and also sectors. And low investment thresholds, so accredited investors can diversify across a number of companies. One of the key areas, we'll go into this soon, is that crowdfunding, obviously by its very nature, it's smaller dollar amounts. But we aggregate those into special purpose vehicles to make them look like LPs. Lastly, empower users to build community with those in the healthcare ecosystem. So we have friending, following, messaging, and sharing, similar to LinkedIn. So this really, if I were to say the type of systems that we're similar to, it's LinkedIn. It's kind of humorous, but Match.com, because we tag data and forward investors to your profile, and AngelList because we invite everybody in. The Kaufman study, this was the genesis of HealthiosXchange, and essentially this Kaufman study came out, and they had made a series of VC investments over the years, and their performance was very, very, I would just say, suboptimal. So they had 5 recommendations, and here are their 5 recommendations, which you can see here. I don't really need to go through each one of them because it's in another slide. But essentially what we thought was, if these are the recommendations from this Kaufman Foundation, and the 2 and 20 is not working very well, then why don't we build a platform with crowdfunding to address these 5 areas. So you'll see the 5 recommendations on the left-hand side in the red area. You'll see the portals that we created. We've created 4 portals. Actually, it's CrowdFinance, Express, InMarket, and we have Foundation Place as well. And you'll see the results and the benefits. So let's just take a couple of these. So invest directly in a small portfolio of new companies. This is what Kaufman's saying. Without being saddled by high fees. That's CrowdFinance portal. This would be non-venture-backed companies. Co-invest in later round deals side by side with seasoned investors. That's Express. So sidecar deals with top-tier institutionally backed emerging growth companies. Move a portion of the capital into the VC into the public markets, in-market. So this is our direct listing, Form 10, reverse merger, pipes, at-the-market transaction portal. And of course, the most important thing here was to address this issue, which was the cumulative effect of fees carried did not enable us to achieve returns sufficient to reward us for patient, expensive, long-term investing. So that's where the fee-free, carry-free could be very disruptive in this industry. What is crowdfunding and why now? So essentially, it's real straightforward. Crowdfunding, for those of you that know Kickstarter, Indiegogo, et cetera, on the donation reward side, it refers to raising a small amount of money from a large group of investors. And it's fueled by the advances in social media, fueled by advances in metadata, big data, XML, such as the Match.com exercise, where you match, an investor with an emerging growth company. So you increase the efficiency of raising capital and partnerships, and you match investment professionals with the opportunities. The Kickstarter and Indiegogo, they've done really well on the reward-based, which a lot of people call prepaying for a product, but still, it's been a very favorable platform on that side. The next layer of crowdfunding is peer-to-peer, which is debt. So I lend you money, and there's no bank in between. And Lending Code and Prosper will originate $2 billion in funding in 2013. Equity crowdfunding, you've got the technology side, you got Funders Club out of San Francisco. It's done a really nice job with Y Combinator-based companies. You've got consumer goods, Circle Up's done a really nice job there with direct investing. And then the healthcare side, we feel we're one of the leaders in that area. The Jobs Act, here we got 6 major points to talk about. First of all, they're making it easier for these company IPOs. The second point is they lifted the general solicitation ban with some strings attached, but still you don't have to have a previous relationship with someone to solicit them. Raise the shareholder cap. This is one of the biggest things for elements for crowdfunding, which is essentially the cap was 500, now it's 2,000, which means you can raise a smaller amount of money from a larger amount of people. So that's a very advantageous regulatory milestone for us. Fourthly, increase the limits on Reg A from 5 million to 50 million, so you don't have to file blue sky documents in each of the 50 states. So they're making it easier to raise money. Legalize crowdfunding from a non-accredited perspective. This is up to $1 million. This is what's gotten most of the press. The top 4, by the way, are accredited investors, not, it's what they call rich man's crowdfunding, essentially what it is. Legalized crowdfunding, that has yet to be passed, by the way, for non-accredited investors, and then just making it easier for funding platforms. Why crowdfund now? Interesting question. Well, we all know that there's an innovation gap. There has been for some time. The venture capitalists like to invest in later stage deals, and for the ones, the Atlases and Third Rocks and stuff that invest, the distribution in companies, there's big syndicates, and so they don't spread the money out. So there's this value void or innovation gap, which you'll see there's 5 points there that kind of, will actually define it. The capital investment and employment suffering, which I'm going to go through a few slides here, VNC investing down. The opportunities, more importantly, there's a big appetite out there for healthcare investments. I mean, there's really very few industries that you can raise money for investment purposes, for return, but also altruistic, right? So kind of like an emotional investment. Private equity, it's a $1 trillion industry. Reg Ds, regulatory changes, the Jobs Act, which was the previous slide, shows the opportunities. New startups and VCs see the opportunity. So a number of crowdfunding portals are coming in these 3 industries specifically. Competition focused on seed and early stage companies, where we will go the full spectrum, for example, and only 5% of accredited investors in the United States have a private placement in their portfolio. We'll discuss why that is. Capital investment, employment suffering. This is not, I think of the 3 here. Obviously, the market is busted open this year, so we'll have to review and implement a few new slides. But still, the IPO market is very small compared to what it was in the 80 to 99 time frame. But the angel VC investing is down. Bank loans are harder to get, so it's definitely a tough place, even though things are getting better. This slide as well, projections of U.S. IPOs the actual versus what was projected. And you'll see from 2001 to 2011 here, it was pretty grim. But we all know that things seem to be getting better, which is good. The next slide, private equity, trillion-plus market. Look at these numbers here, Reg Ds, right? So you got $905 billion raised. Angel investing, $22.5 billion in 2012. Venture capital, $29.9. So if you think about it, what slice will crowdfunding take? That's the key question. What percentage of the Reg D, the angel, and the venture capital markets will crowdfunding, just like Clayton Christensen with disruptive, this innovation, with technology. It starts off at the low end, and then it eventually battles the incumbents at some point. We don't think that crowdfunding will disrupt the ecosystem. We think it's more disintermediation. We think it's support. However, we do feel that it is going to take a slice for both angels and venture capital in the Reg D market. Regulatory changes are creating new opportunities for monetization of raising capital. So over the last 18 months, we've had a number of firms raise money in the crowdfunding space, $30 million, and Circle Up is a great example, raising money from Maveron and some very influential groups. Google Ventures has also been very active in the space, including in the peer-to-peer side as well. This is kind of a snapshot of the activity in the crowdfunding space, including HealthiosXchange. On the left-hand side, you can see some of the companies here. Polywog is a firm in the healthcare space out of the East Coast. Those are direct investments into Reg Ds, and then the firms on your right actually are benefiting from exemptions, non-broker dealers, and they're really carry-based models. HealthiosXchange incorporates both models, both the direct model on the left and the SPV type carry model on the right. So we slice it in a different manner, but essentially we think that both models have merit. We take a look at crowdfunding today. You see up at the top there, that's where most everyone's focused, but yet you've got all these other slices of the wedding cake that are not being addressed. So we feel that you take a look at the small cap IPOs and the direct private equity, et cetera, et cetera. There are areas that we feel are not being that our competition's not focused on, and maybe for good and bad reasons. I mean, the seed capital, the early stage. You talk about Y Combinator companies; they get a lot of press. Thus, they're going to get, they're probably going to raise a lot of money. I mean, people want to be in the next Google. However, there are markets in healthcare, for example, that are a little later stage, and we feel that as an investment bank, that's FINRA, SEC, broker-dealer, we're able to address that and meet that market. This slide really, I mean, this is really humbling. It says 8 million accredited investors in this country, only 5% have a private placement in their portfolio. Why is that? Well, one of the reasons is it's not very liquid. So if you're looking to put your money, you'd rather put it into something that was a publicly traded stock or a mutual fund or something like that, ETF. But when we look at the private equity side, even though only a small percentage have them in their portfolios, when they took these surveys, they found that if you take a look at medical device, healthcare services, and biotechnology, most investors, I mean, they're up at the top of all the other sectors. So that's very interesting. But this is the opportunity. The opportunity is can we develop a platform that will appeal to investors that want to diversify across many companies? A lot of these investors don't want to put 50 grand into one company when the odds are 30 to 1. They'd rather put 5,000 in 10 companies. And if they're going to do that, that small amount of money has to look to the company and to follow-on capital as would an LP. You can't have 500 investors, each with their own lawyer and documents. It would be an investor relations nightmare. So we could talk a little bit more about how we're addressing that. Why healthcare? This is pretty obvious, right? I mean, it's a huge market. Superior investment returns based on demographics. That 5% of the 8 million we talked about it. There's a hole in the system here with the venture capital, and then of course we're working in the venture philanthropy area as well, which is would be the Kalydeco cystic fibrosis vertex, where foundations are actually investing directly into companies versus giving their money to charities or to academia, which we think is the future. What is HealthiosXchange and how does it work, right? So there's the sponsor, Healthios. We're very unique in the industry. Most of the other crowdfunding portals don't come from an investment bank origins or DNA, so we feel we have inherent advantages being an investment bank. What is HealthiosXchange? It's an equity crowdfunding portal. You know, we touched on this stuff in previous slides, but it's a direct access, you know, and no fee, no carry basis. No orphan investments, stringent quantifiable drug diligence methodology. By the way, the site can only provide so much diligence. It does not replicate what an angel group could do, for example, somewhat virtually. But, you know, we have a Q&A forum, we have one-on-ones, we can do roadshows, but, you know, we feel that, you know, with our scoring and whatnot, we think that we do a very good job, you know, versus the competition in helping our investors perform due diligence. So that's the market. You know, we talked about it's like LinkedIn. It's like you know, Angel List. You know, essentially, it's only healthcare first of all. So we feel that that's very important. It's built for community, an ecosystem, and you'll see there's a lot of people that are in this portal. That 100,000, by the way, is not in there yet, but it will be scaling to that point very shortly. But there's a lot of people in the portal. There's a lot of reasons to come into the portal. If you're an emerging growth company, accredited investor, an investment professional, or strategic buyer, with these 4 portals, the crowd finance through in-market. Once again, open access. There's a scoring system where we score companies on 104 quantitative measures. We looked at 2,000 companies, and we tracked the variables that correlated and put them in normalized the data, and we have a very robust scoring engine that will be launched here in the next month or so that will help our investors find companies that have the highest probabilities of success. The continuum is important here, very important. You know, it can't just be crowdfunding. We think we need foundations. We need, for non-dilutive capital, we need the venture capital community. We need an alternative investment community. We need a liquidity portal. We don't think that crowdfunding alone is going to get it done. We do not want to orphan companies. You've probably all heard of the seed to Series A crunch. So we want to avoid that for our companies. And so we feel that being a FINRA, once again, a FINRA registered broker-dealer, we're able to do, for example, in-market, which is the liquidity portal that most of the non-investment bank type crowdfunding platforms can't offer companies. No adverse selection. We've got, I don't know, upwards of 5,000 companies in the portal. Most of them are venture-backed. We're entering non-venture-backed companies. They're actually in 46 market sectors. We've increased that in pharmaceuticals, medical device, and healthcare services. And so you're organized by ecosystem. So oncology, cardiovascular devices, and so people can get watch lists. The strategics, the venture capitalists, can get notifications of your company page if something changes, which is really important from a partnering perspective, which is a big part of the portal as well. The members, we're only as good as the buyers, right? So, accredited investors, we're going to have a bunch of them, and we're going to have investment profiles, and we'll be matching them to you like Match.com. But, we have very comprehensive engines for, proactively sending members to your profile. They also could find you in the directory under, like, say, page views, the sectors by alphabet. There's different ways that investors can find you. When I say investors, I don't mean just accredited investors. Venture capitalists and family offices will also be in the portal as well. Information flows equals capital flows. Research is very important to us. Our research, though, is a little bit different than what you have out there. We don't do buy, sell, hold. This is quantitative, kind of like Google type stuff, where we take a look at capital flows, like if we took a look at the oncology market, who are the most active VCs, what's the liquidity, how much capital has been exited in the last 3-4 years, how much is illiquid, who are the most active acquirers, the major strategics, how strong is their currency. So it's very quantitative. It's kind of like Moneyball. It's a very, very interesting platform. And all this, by the way, is free. Everything I've shown you is free. So this is not a bait and switch. This is kind of like the Palo Alto model. So we feel that obviously we make our money on the success fees. The key is to get all the constituents into the portal. 104 quantifiable measures for our scoring system. You'll see some of these some of the elements down there, and essentially this is a very ambitious effort. We're never going to get it right because there's certain things you can't score quantitatively, so there'll be a crowdsourcing component, qualitative, that'll come into play. But it's guideposts. We want to get the right 25 companies in each one of the market sectors. That's the most important thing to us. We're not really concerned that the 21st base company is better than the third base company. We just want to make sure that we get the right 25 in the top quartile. Think efficiency of data and information. Here's a company page. This is really the engine. Since I come from Detroit, this is the engine of the portal right here. So if we'll take it from the northeast, we'll swing all the way around. There's your score in the right-hand corner. You'll be able to see the individual scores, which can range from patent to clinical, regulatory, strength of management team. You have fundraising. You have target here. This is for illustration purposes only. $1 million. You've raised $500,000. You have 8 days left. These are typically go on 90-day cycles, as stipulated by FINRA SEC. The Invest Now button, the reserve system. This is where the investors can come in and put $5,000 into your company. So this is the seamless e-platforms that they go through, where they can electronically look at the documents, and they can go ahead and wire their money into escrow, think PayPal. And when the minimum is reached, essentially the funds are deposited, are sent to the company, and we get 5%. The deal points, you see the type of security. We do notes, convertible debt, common, preferred, convertible preferred, etc. Minimum raise, this actually wouldn't be 0, but it would be like, say, $500,000. Maximum raise, minimum investment, in this case it's $25,000. Pre-money valuation, and then use of proceeds. You got a description of the company. You have the highlights. You have a Q&A where you can actually speak with management, public documents, confidential documents behind a firewall, and then you have video and other things. You can add your investor base just like AngelList as well. Okay, hold on a sec. We've got a question here. How do your investors view device company opportunities that have FDA, PMA, regulatory pathway? So, one of the things that the investors, especially, I'm not saying investors that don't have any expertise in the space, but ones that do, the regulatory pathways are going to be integral for the scoring. So, if there's more optimal regulatory pathways, obviously the company gets a higher score, and that's going to be one of the big diligence issues for the investors. So I would say that it's very favorable. Okay, we've got, let's go to the next slide here. So offline meets online. So we have partnering forums. This is really a key competitive differentiation as well. And that is essentially we have, like, think bio partnering forum. So we bring together emerging growth companies with strategics. You'll see we've done a number of them over the years, and they've been very successful. It's important to have offline meetings, not just online, especially in a capital-intensive industry like healthcare. Okay? Why should I curate my company page? So for those emerging growth companies that are on the call, one of the questions you're going to ask is, okay, well, why should I become active in this site? There has to be some benefits, like how do investors find me? How do I, get top of the pile with venture capitalists and strategics? I mean, what is your system going to help me in this area? Well, take a look at some of the incentives for curating your page, which means you add your documents, you're adding team members, investors, board of directors, colleagues. What happens is the more active you are on the site, the more page views you're going to have. And the more page views you have, the more visibility you have. The more visibility you have, the higher chances you're going to find those investors or partners that you're seeking. But there's, 6 different areas where curating your page has a positive effect. So let's take the first one. Designating a page administrator to your company page. Why is that important? Well, you'll get activity updates of who comes to your page, and we can provide you with the names of the individuals that come to your page so you can follow up with them. Secondly, sector roadshows. Companies that are trending and their profile is complete, so that means they're getting a lot of page views and activity. We'll set up one-on-one meetings with leading strategics and investors. Thirdly, sector webinars panel. We have panel discussions. Those companies that are very active in getting a lot of activity, we will allow them to present along with leading strategics and investors on webinars and panels. HX directory visibility, there's a tab that says most viewed, right? HX featured tabs, for example, is another area. HX newsletter. Newsletters go out. We have 900 members, by the way. Accredited investors, emerging growth companies, investment professionals, and strategic buyers. So that's since August 2nd. So it's been very robust. Company highlighted in the HX newsletter. So these newsletters go out bi-monthly, and you'll be profiled there. And then lastly, watch list. The strategics and the investors like venture capitalists ask us for watch lists in different sectors. So you know, like I said, it's a real big data exercise, and it's leveraging a lot of social media, which obviously we all know, you know, it's been getting a lot of press lately. This page right here is what you would say would be best in class, and essentially, you know, we're going to send you the webinar and the deck afterwards. But if you take a look at like Shell Technologies, they've got followers that get updates. So anytime something changes on the page, like a document, you add a document, you add a team member, you know, any of those types of things. The followers, your score changes, the followers will receive an update. You have your team members. You can go ahead and friend people. You can share. You can message. People, you know, can follow your company. So you've got your documents, you've got your visuals, followers, etc. People know what market stage. They know if you're funding. So we would highly encourage all emerging growth companies that are on this call. And by the way, there's typically many different types of people that join these webinars. But if you're an emerging growth company, C-level executive, I would encourage you to go to the portal, to list your company, become an administrator, and send us the documents and add your team members, invite them to the page. Because once you do that, I got to tell you, from an investor relations standpoint, I don't think there's a better tool that's out there than this one. One of the things I would encourage you guys to do is to go ahead and you can email me at sjordan@healthios.com. You can also, that's sjordan@healthios, health with an ios.com, or go ahead and call me at 847-849-1736. This next one says, how do investors browse companies that might interest them? There's a passive way that investors find you, which is that, say, for example, they're really into you know, orthopedics, for example, you know, devices, etc., and so they'll look for you there. You know, the higher score companies will be higher ranked, so they can take a look at you guys. The other way that we do it is very proactive, which is we tag data, and we go ahead and we send those to your page. So proactively using technology, XML metadata, to send them to your page. So, you know, I mean, obviously the point here is nobody wants to, well, some people do, but most people want to be very efficient when they raise capital. They don't want to fly all around the country, stay in hotels, waste airplane fuel, and have a guy that you met with 4 times tell you that he's not going to fund you. So we feel that technology can play a role here. So, is the exchange limited to U.S. companies? So the way that the rules are slated right now is that it's U.S.-based companies with foreign investors. It's not the other way around. So if you're a foreign-based company, you're going to have a U.S.-based subsidiary. So that's essentially the rules and regulations. When does the investing go live? I noticed that investors were listed last week. The page not loaded now. So we're loading companies. We're inviting investors into the portal like a true exchange, and we feel that within the next month or so, we'll be able to have the necessary ecosystem to be funding companies. But we're not going to launch until we're, you know, I don't know what that number is. I mean, we've got 900 now. Of those, 200, 300 are accredited investors. You know, I would say within another month or so, we'll feel confident we have enough investors in the portal. So, anyway, guys, that's it. Thank you so much. We really appreciate it, your time, and look forward to your participation on future webinars. Thanks so much.